With crypto, there's a lot of similarities with the stock market. There's an old saying that I've always had in the stock market that everybody's a genius in a bull market.
Yeah.
You know, where when stock prices are going up, everybody will tell you what stocks they're buying, right? When stock prices are going down, everybody gets really, really quiet. And it's the same with crypto. You know, when Ethereum and Bitcoin and some of the others are going up, everybody will tell you how smart they feel. But when they go down, you know, no one wants to say a word. And the reality is you have to look for the utility or the value of any investment that you make. You know, you have to say, why are people buying Bitcoin? In reality, Bitcoin, just like an NFT is a digital version of art, Bitcoin is a digital version of gold.
Right.
Gold, you know, people say, well, gold has real value as jewelry. Nobody needs gold jewelry. Gold has value because people assign it value. And those types of investments are called store of value. They're kind of like commodities, like you just said. Bitcoin's the same way. It just happens to be digital. It's limited by an algorithm and how many that's created. So there's a scarcity factor. You can't just create it forever. But mostly people buy Bitcoin and own Bitcoin like I do because other people own Bitcoin. Just like people buy gold. Now you hear a lot of stories. Bitcoin is a hedge to inflation. Gold is a hedge to inflation. It's not. It's not. And so you've got to understand, if you're buying Bitcoin, it's a store of value. And like any store of value, gold or otherwise, the price is based on supply and demand. When people are selling, more people are selling than buying, it goes down. When more people are buying than selling, it goes up. You know, tech stocks have gotten crushed worse than Bitcoin and Ethereum. Ethereum's a little bit different, right? Ethereum has some level of utility where you can use it for transactions. Most NFTs are bought and sold using Ethereum. So in order to buy a Bored Ape for 100 Ethereum, you have to go buy that Ethereum. And so the more demand there is for Bored Apes or the Ape coin or whatever that's based on Ethereum, the more value Ethereum, the token, is going to have. And so when I look at any of my crypto investments, that's the first question I have. What is the core utility of it? What value does it serve? And so that's why I own more Ethereum than I do Bitcoin. You know, I own Amazon, I own Netflix. Those prices have gone down more than my Bitcoin and my Ethereum have gone down. But that's just the way it goes. And so, you know, at this point in time, what I'm doing is looking to see, is there anything there that's gotten so cheap that it's time to really take a strong look at starting to buy some. And I've dabbled, you know, when Ethereum gets down under let's say $1,800, I'll buy a little bit. When Bitcoin gets down under 28,000, I'll buy just a little bit, because it's really hard to predict how low it's going to go. So I haven't gone all in yet. I've been around long enough to the early days of the internet, right? Where people would put up a website, raise money, and say they're going to do all these amazing things. And then the internet stock market bubble burst and nobody could deliver on anything. And so you've got to know, as a creator, no matter what it is that you're creating, you've got to know the expectations of your buyer. And you've got to be really, really confident that you can meet those expectations, because if you don't, then your brand is crushed. And now all of a sudden you went from being this amazing creative person to the person that, yeah, I created this, you know, I trusted you, you created some amazing work, but you couldn't meet the expectations that you set. And it's because people don't fully understand how all this works that they, like you said, they overpromise and underdeliver, and that's a real problem. And I'm spending, you know, $5, $10, $15, $20, $50 for an NFT. I don't care if it goes up in value or not, because my expectation is I just like to look at it, you know, and I like supporting the person that I'm buying it from. And if that's the expectation you set, then you're always going to be good. You know, the key to me is knowing why you're in business and why you're going to be good at it. Because the hard part is, you know, just like starting this podcast or doing any of your businesses, is the execution of it all, right? Because you've got to realize there's somebody who's going to be competing with you 99% of the time.
Definitely.
It's rare that there's a business that has no competition. And those people are just trying to kick your ass. If you compete with me in one of my companies, I'm trying to kick your ass. I don't care. You may be nice and we can have a drink, but I'm still going to kick your ass. And it's because I'm going to put in the time to learn my business inside and out. Look, I've invested in hundreds, probably more than 1,000 companies at this point in my career. And, 1% is still 10, and that 10 is too many, but some of those lessons were painful. There's so, all the things we just talked about with Web3 and tokens and, 3 years ago, I didn't know 99% of them. I had to put in the time to learn it. And literally it takes a lot of time. It's not something where, you just, watch some videos and you've got it all figured out. You've got to dig in, you've got to understand how smart contracts work, you've got to understand what decentralization is, how DAO works. All those things we've talked about, to me, that's hustling. To me, that's grinding. That's part of what you have to do to win a business.